Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. I'm your host, Beechek. I'm joined by my legendary co-host, Legendary, and we've got Sammy back with us from his long hiatus on X and on video on YouTube, which is also streamed to X. So you can enjoy us all in various forms of content. Just a reminder, folks, before we get into the show, this is not financial advice. We do not know anything for sure. Please do exercise your own judgment and proceed with caution. With that out of the way, Legendary, how are you doing this Monday, the 12th of February?
And GM, quite wonderful. I'm back to Vienna after a little trip to London. Currently staying for the day at my parents' house. So it's kind a bit of a extension of my traveling. Almost feels like an additional day of holiday to be there and do the dog sitting. And had a lovely weekend.
It looks a little bit, I mean, I'm sure your parents' house is lovely, but you've got the kind of prison-y vibes, bit dark shadow in the corner. Again, you looking forward to get back to the art and cultured office that you have at home?
I'll make sure that my parents won't listen to that show if you attest the prisony vibes to their house. But I did pick a spot with a white wall to kind of respect the privacy.
Very good. Sammy, no such respect for privacy with your office choice. All kinds of interesting things in the background. How are you doing, my friend? How are you feeling now that you're back, hitting the ground running after some time away?
I'm good. Literally spent the whole weekend going through a bunch of different protocols. So I know I've been speaking to you offline about parcel and stuff, but yeah, some interesting stuff going on that, yeah, digging into. So good to be back.
This is a good question for you starting out, because I know you've been away for a while, and one of the things we've spoken about a lot at the start of shows is just how we approach managing ourselves, managing our own expectations, managing the workload, managing just every aspect of trying to take advantage of every opportunity. How did you deal with being away for quite some time? Because obviously it can get overwhelming at points in time. People want to be able to take a break, and yet they know that there's still things going on. The market's not going to stop. So talk us through, how you felt being away and how you kind of managed yourself.
I felt stressed. I think just try. I mean, you're supposed to enjoy yourself when you're away, but I think January was a pretty big month. There's a lot going on. So just in between flights, I think I caught like 5 or 6 flights whilst I was away. So just managing that, being disconnected from the internet. But I think ultimately I just kind of like put stuff down in a spreadsheet and prioritized it. It's like, okay, these are the things that I need to do. This is, I need to switch myself off at this time just to make time for family and friends. So yeah, it was a challenge, but yeah, I think being back now, I'm kind of a little bit less stressed. The anxiety levels are down, and getting stuck in. So yeah, spreadsheet.
Good stuff. Legendary. It sounds like whether you're in the moment, whether you're in the arena making plays, or whether you take a break, either way, we're still going to feel an amount of stress. Do you think that's just inevitable? How have you been thinking about it now that we're more than a month into the year?
It's a good kind of stress. Like I felt a bit more chill with the airdrops. Then I saw Sammy obviously having this list with the 300 protocols. Then my stress levels increased, and so did my motivation to farm even more. So I think it's a good kind of stress. And now, Sammy, that you just mentioned parcel, I swear to God, I'm not making this up. I had a look at one of my parcel wallets just now to see how much liquidity I have in there, because I did a little top up over the weekend on that specific wallet. So I topped up like another $700, and now the total sum on that wallet is $4,200.69. So this is the most degenerate number it could be, and I didn't even intend for this. So apparently, there's like this inner degen that makes sure that my airdrop farming balances are in line with Web3 culture.
How did those 69 cents get there, Legendary? Be honest.
I can tell you that. That's a pretty easy answer. I was gambling on shuffle basically yesterday, and I took all the profits and put them into there, like all the USDC that I did withdraw, bridged them over with Port Bridge, and whatever was in that wallet in stable, I just chucked it all into Parcel.
Fair enough. Not a manual entry then. Makes makes sense. Okay, guys, we're going to get into today's show. All kinds of stuff going on in the market, and it feels pretty bullish. So we're going to be speaking about all of that and more in just a moment. But before we do that, today's show is sponsored by our friends at Gondi. We're delighted to shout out today's partner, Gondi, the premier NFT lending protocol where smart lenders can refinance NFT loans and smart borrowers can get steady rates against their best NFTs, buy now, pay later, and eradicate potential liquidations with the sell and repay feature, which is the feature we're going to spotlight a little bit later in today's show. So we'll get there in a little bit. But in the meantime, let's get to the snapshot. As always, this is pinned up top. It's where I draft all of the daily news. If you do find that it brings you some value today, please do give it a like. Let's get into it, starting with some price action. We have, in fact, I haven't completed it properly today because I was up till 4 a.m. watching the Super Bowl. So I'll go to the coin market cap. We've got Bitcoin at 47.9. Okay. We've got ETH at 2.5. Solana is at 104, down almost 5%. But all of that stuff is obviously quite high on the 7 days. So Bitcoin's up more than 10% on the week. ETH is up almost 7% on the week. And Solana is up 7% on the week too. Getting into some headlines, we've got Pudgy Penguins ripping past 20 ETH again, up 25% on the week. This is the second time it's breached that number. Is it going to stay there? Where's it going to go? Going to discuss that in a moment. Number two, Doodle's up another 10% to 3.5 ETH after more than 1,600 ETH volume this week. You will have seen that there was an OTC deal brokered by Doodles, where 50 Doodles were added to Pranksy's vault from an airdrop farmer. So that was kind of cool seeing a team broker that type of deal. And then finally, the headline is the crypto headline, which we want to touch on today because Bitcoin has moved up 10% to 48K over the last week, and ETH is up a reasonable amount too. Want to think about where crypto is going at the moment. A couple of top sales. We've got a Victor Wembanyama Top Shot serial number 1 selling for $30,000. Top Shot still showing live and some real collectors still participating over there. Etherrock number 8 purchased for 160 ETH. That is $401,000. A lot of people triggered last week by Etherrock's inclusion at Sotheby's auction, but people still want to buy these Etherrocks. That seems to be one of the main conclusions. And a Pudgy Penguin Gold selling for 50 ETH. That is $124,000. In terms of some NFT floor prices, we have, let's refresh the page on Mintify. We've got Doodles at 3.5, up almost 10%. Everything else is kind of correcting based on the big rises up. So Pudgy Penguin is actually down more than 5% at 20.3 now. Little Pudgies are down almost 9% at 1.9. Bored Apes down 3% at 23. So now there's a gap of 2.6 between Bored Apes and Pudgies. When is the gap going to close? We're going to discuss that in just a moment. Those are the headlines, Legendary. That is some of the price action. Anything catching your eye before we get into the headlines?
Definitely the doodles, definitely in a frustrating way. I mentioned it on one of the shows last week that I got a doodle and I wanted to take a bit more time to do the selection of a grail one that I wanted to buy. And
Yes.
now the price has moved up once more. And once more, I am not apparently able to learn the lesson in crypto of if I want to do things, then FOMO to the max and do everything instantaneously and don't postpone things, because otherwise you will be punished. And here I am punished again with that move in the floor price.
What kind of grails? There were some really cool grail sales. I saw this like whale design one selling for like 50 ETH. Was there any particular grails that you really liked, and how much, like, where has that price action kind of gone?
Some of which were like under 10 ETH, which I liked, like in that 7 to 8 ETH range. I think one of them is still there. The others have moved or have been delisted. So I'm not going to specify what I'm exactly looking at because I don't want to be front run on my own purchase.
Fair enough. Sammy, anything catching your eye? Either things that I've mentioned, because we're going to get into those headlines in a moment anyway, so we're going to talk about those things. Anything else that's been catching your eye in the market over the weekend?
Well, I think the biggest thing for me is probably the Bitcoin ETF inflows and how that's impacting the price of Bitcoin. I personally think that we're getting to that stage now where if you've got this institutional capital coming in, it's a simple supply demand mechanics. It's probably going to go up. I don't think we're going to have another dip. I think it's going to be one of those things where we just see Bitcoin rip and then we see liquidity sucked from every other area of the market as everyone chases the pump. So I actually think we're probably not far off what's going to happen. So it'd be interesting to see how that plays out over the coming weeks or months.
Interesting. Is there anyone, I listened to this really interesting podcast with, I'm going to find the person's name. I think is it Alex Kruger? Kruger. He was very, no. Oh yeah, it is. His handle is Kruger Macro, at Kruger Macro, Argentinian economist, just talking about the way things are moving, whether we should be bullish or bearish at the moment, and all kinds of macro stuff. I thought I just would recommend him as a follow, basically. I thought he was very smart, sounded very, very accomplished and very well researched. And he was speaking a little bit about Bitcoin and essentially all of this stuff. And one of the key learnings, I'd be interested to hear your thoughts on this, is that people seem to think that Bitcoin is correlated to the stock market in the sense that once the stock market keeps ripping up, like Bitcoin will go up. If the stock market struggles, then Bitcoin will struggle. His point, which he says is backed up by data, is that has only been the case since the pandemic. Once the pandemic hit, then we became very correlated. Before that, we were far less correlated. Maybe Legendary first. Do you have a view on that? Have you thought about that much? Do you think we're moving into a market where Bitcoin becomes an asset which is entirely correlated?
I wouldn't say entirely correlated as in like a one-to-one correlation, but I would definitely say that the correlation factor, if you would look at it like between 0 and 1, is on the increasing side, which makes a lot of makes a lot of sense from the perspective that if institutional money is moving in, institutional money trades different than retail. In many institutional portfolios, or in most of them, I would assume that BTC is going to be the highest risk position. So if things would start to correct and this is not a long-term position in there, those institutions might be likely to trade out of their BTC positions, especially when they see a dump on the stock market. Then and they want to adjust for that, then you would typically get rid of your highest risk on assets, which in this case would be crypto. So I definitely think that this correlation is increasing the more we get institutional money coming into the space, although there are like a couple caveats to that. First of all, you will have institutions who see this as a long-term play. You have other different factors. You have inflation also playing an important role if you think about that BTC narrative of the inflation hedge. And obviously, if you are now in a situation where, and Sammy pointed that out just in the intro, that inflows are strongly increasing. Again, we are now seeing the third ETF with ARK passing that $1 billion in assets under management. We've seen a strong increase in inflows. I think February the 8th, end of last week, it was, according to Chainalysis, 4.3 bill. So BTC inflows into exchanges overall, which I think is a stronger effect in for the time being. So I think even a small correction on the stock markets right now wouldn't stop the BTC rally we are seeing right now. But I do think that this correlation factor is certainly increasing.
Yeah, it's interesting. I think that as well. I think that essentially what happens over time is that the volatility of any ETF asset, specifically Bitcoin, and maybe some of the other cryptos that are adopted by the types of buyers who are not operating with hot money, buyers who are just buying to accumulate, like those people who are buying the ETF. Like, I think the volatility essentially gets very much tapered, and we see far less volatility moving forward. And that's my kind of key thought on it so far. But interesting thoughts shared from you there, Sammy. Want you to come in on this. Any additional thoughts here?
Yeah, I mean, I'd agree with that. I think the point that Legendary made around like institutional trading, I mean, they sell the pump, buy the dump. It's kind of like, as it matures, you're going to have a lot more strategic acquisition of the underlying asset. And I think that is going to become similar to your point. There'll be less volatility because they'll trade that out, especially when you've got algorithms and all this kind of stuff coming in, sort of maturing market. The dynamic's going to shift. But I do think that there will be this last huge rally before we get to that stage. And I think it's probably going to be the last cycle that we'll see that. So it'll be interesting to see over the next 6 to 12 months, maybe even sooner, what happens. But yeah, my eyes are on the market, so it's time to be in the market. So
yeah, I've seen a lot of people kind of talking about allocation and just being like, God damn, like I would not want to not be allocated right now. And again, none of this is financial advice. Obviously, we can't say what people should be doing, but I've just noticed a lot of people talking about now specifically as a time to from their personal perspective, to be wary of not being allocated at the moment. Just want to shout out Juicy Jammer in the comments on YouTube. There's another Kruger. This is the one I was actually thinking about. There's two Krugers who are great follows on Bitcoin. Fred Kruger is also a good account to follow. It's at @Kruger. And I've got this, he's like pretty wild on Bitcoin. Really, really fun person to listen to. But he's also just routinely sharing like his hyper bullish thoughts on Bitcoin. So if you like just reading bullish stuff, you're not going to get much at like bearish stuff. So just be prepared. But it's kind of fun to see. I think he's been a very successful investor in his life. I just want to read through one of these posts because I think people will be interested. Then I've got a couple more Bitcoin posts to pick up because it's been on my mind recently as well. I want to hear your thoughts on it. He's talking about adoption here, and he says a second post on adoption and how we get there. He says the ETF is going to be a big first phase in adoption. 158 million Americans own stock. Getting a significant percentage of those to own a Bitcoin ETF in the next 5 years is not that difficult. American investors are pattern matching animals. Like us early Bitcoiners, they will soon understand number go up. This is going to increase people who actually own Bitcoin 10x from the low single digit millions to now. And interestingly, he spoke about this, which has also been on my mind a lot. And I've been trying to get exposure to this. I'm getting in touch with a few people at the moment. He said the next thing will be fast layer 2 wallets for self-custody. Sorry, this just disappeared from the screen. Going to share that again. Fast layer 2 wallets for self-custody. Facebook has 2 billion daily active users. Can we get similar type of numbers for Bitcoin? I think so, but I certainly don't think it's happening on Bitcoin layer 1. You need something that is much, much faster and much cheaper. Could it be Lightning? Maybe, but the user growth numbers are not that great. So he then talks about a couple of other options. He believes that it will get cracked sometime over the next 12 months. So some type of solution for a faster layer 2 style on Bitcoin. He says we need consumer grade apps to broaden Bitcoin to mass market use cases. Legendary first, what do you think on this thesis in terms of the adoption of Bitcoin and the idea that it needs an L2, like a way to move it around faster and quicker?
Definitely agree with the fact that it needs an L2. Playing devil's advocate, why does it have to be a BTC layer 2 solution? Why can't it be the internet money layer that ETH is building with its smart contract stack and its layer 2 solutions that also obviously can use ramp Bitcoin? So yes, mass adoption is not working on BTC's L1, but I don't necessarily think that an L2 on BTC is the right solution for most retail applications.
Interesting point. That's quite a funny point. It's like, Why build it yourself when there's a way for it to operate anyway? But you just know 100% that that will not appease anyone, right? Like, although it kind of makes sense what you're saying, like, look, there's no actual need. We've built this thing over here. You can wrap it, you can do this, and then we can just carry on with our business. You just know that's not going to appease the people who um who are like Bitcoin advocates. Do you think that's fair, Legendary?
Yeah, it's not going to appease the Bitcoin maxis, but if we talk about mass adoption, then nobody needs to appease the Bitcoin maxis because they're definitely in the minority. It's about the typical retail customer and not what some Bitcoin maximalist would like to have in his utopian Bitcoin only world, to put it a bit more bluntly than I would usually do.
I love it. I love the thought, to be honest. Funky, your hand's raised. You speak very well on these topics too. Welcome to the stage, my friend. What are your thoughts here?
GM, everyone. Yeah, I do think that we're still going to see some sort of native L2 for Bitcoin. I mean, Lightning has its own problems because there's an argument to be made that it's centralized, it's slow. There are other challenges too, but just going back to the correlation thing, I wanted to say really quickly, like when you even look at the stock market, it's really the Magnificent Seven that have outperformed. I mean, they're dragging the S&P and everything else up with them. So I think you just look at Bitcoin as another type of tech, and this is probably why it's catching a bid and everything is going up. But the real question I want to ask you guys is a lot of speculation around whether or not we'll hit an all-time high before the halving. I mean, the strong weekly close we just had indicates that we're probably going to get above 50 pretty soon. And I'm just kind of, it seems like sky's the limit. So do you guys think that we'll have a new all-time high before we even get to the halving? Because if that happens, I can't even imagine what this Bitcoin bull run is going to look like and how it's going to drag the rest of the crypto market up with it.
Great question. Legendary first.
Damn, I have to go first on that. I don't know if we're going to see an all-time high before the halving. I thought about that, but I probably don't think so. I think we might see an all-time high this year, but I don't think we're going to see it before the halving. But that's just purely speculative and not based on any kind of sophisticated model that's running in my head.
Yeah, just instinctive feeling. Sammy, do you have a thought on that?
Well, I know there's a lot of analysts that have revised their price predictions. I think it's 112K for this year. So it's feasible. I think that's too soon though to see an all-time high. I mean, it would have to really rip because what's it at, like 48K now? So all-time high, did it hit 68 or was it 64? I can't remember which, but that's a fair whack up. There's a lot of liquidity that's going to have to flow in. I mean, it could happen, but I think realistically, all-time high before the end of the year, maybe we break the 100K, but I don't know. It's hard to say. It's finger in the air at this point.
Do you remember though, when in 2021, when I first got in, I've got a few things to say here. And again, we don't know how this works perfectly. It's not financial advice, but do you remember in 2021, because this was the first time I ever bought Bitcoin, it felt like it just teleported. Like there was this period of time where it just teleported. I bought in at maybe 30K for the very first time ever. And it had already been teleporting and it just continued. And I remember specifically the feeling because I never felt bad about the buy because I was like already up straight away. It just went up so quickly after. And I would link it to what this Dot Kruger, I think, is it Fred Kruger? Yeah, Fred Kruger, this account. I actually watched one of his videos on the weekend, 15-minute video he shared just on his thoughts about price action and how things could go. And it reminded me of one of the things Suzu wrote about at one point where like round numbers are for buying. And it's just the idea that once we breach 50, if we do, it's just going to, at some point in time, people are just going to start looking at the asset and the number and start thinking like, well, this thing just keeps going up. And if we don't get it now, it's just going to keep going. And I think that's kind of what he was suggesting, where the 50 number to him, and again, most of my thinking comes from just reading other people's thinking and trying to decide where I stand on it. His position was the 50 number is a big number, and that could potentially like kick people into gear for the people who are still like not 100% sure or want to get in, but they're like, oh, maybe I'll do it next week or maybe I'll do it the week after. But for him, the 50 number was an important number and might kick people into gear. Legendary or Sammy, either of you, any reflections on that as a perspective? And then Funky and Matthew have their hands raised. Want to go to them? Sammy, you're off mute. Do you want to go first?
Yeah, I definitely think there's stuff to psychological, like psychology behind numbers. The round number thesis definitely makes sense. Like there's a lot of momentum. It is, like, because you don't know when that momentum is going to stop post that number.
Yeah, exactly.
There's probably going to be a pullback. There's also like there's theory behind like Fibonacci, like all those different sort of numbers, like the golden ratio, like, and a lot of algorithms, especially when institutions come in, trade towards that as well. So there's a lot of dead space between certain numbers. So once it rips past 50, it might hit a certain number, and then there's probably dead space till it hits, say, I don't know what the numbers are, but say 60K or whatever. And then there'll be a pullback, consolidation before it goes higher. So yeah, I probably agree with that. It's just very hard to say, like, because sometimes you have to be a contrarian and counter trade the market. Otherwise you just get wrecked. But yeah, I think this time round, it's going to be a different dynamic. So it'll be interesting to see if that thesis still plays out.
Just talking about this out loud, like to Funky's question, I think we do see it. That's just my feeling based on that's my instinct, actually. So I'm going to be a bull. You guys can be the bears. Legendary, you came off mute. What are your thoughts?
Yeah, just to give a bit more perspective on your feeling of teleportation when it came to the last BTC run. October 1st was like a local bottom, 43K. November 12th, we hit 64K. So that was a almost 50% move in 6 weeks. So it did happen pretty fast. And if we were to be on the trajectory and on the timeline, there is a world where, all-time high could happen before the halving. Again, I don't think it will, but it wouldn't have to be faster than the last bull run for it to be, for it to happen.
There was this really
takeaway.
Amazing. That's really, really great data. It reminded me of another thing which this guy said in the video, which is really helpful knowledge. And I think people already know this, right? Like you can't, what do they say? You can't time the market. Time in the market beats timing the market. He said something like, if you look at the data for Bitcoin in the past few years, like there's about 15 days in the year where it's going to move big. Like that's it. You got to be in for those days. If you're not in on those days, then you're buying at the wrong time, basically. So again, interesting data point, kind of backing up what you said. Legendary, you want to come in?
Yeah, it's NFT stats also had a statistic on that for CryptoPunks, I think, and for apes as well, if I remember that correctly. Same situation there. If you missed the 15 most important trading days in the year, you basically missed all of the profit that happened, and you should focus on time in the market, not on timing the market, especially with volatile assets like these.
Good stuff. Great conversation. Enjoying this. I think this is very helpful. I've got another really interesting one to talk about in a moment before we get into like the actual NFT market. But let's go to Matthew first. Welcome to the stage, my friend. What are your thoughts here?
Good morning, everybody. Hope you all are well. I think for me, one of the biggest things to keep in mind is a very basic supply and demand problem with Bitcoin. And now you've got this ability for thousands of registered investment advisors like myself to go to clients and say, hey, there's this new shiny object that you should be interested in. By the way, in a couple months, there's going to be this really cool technical thing that happens. Don't worry about the technical details about it, but it's going to be really, really cool. And a lot of stuff is going to change and price is going to go up. And they don't really have to tell people why this is super important or anything like that. They just have to say, hey, just 1% of your portfolio, just give me access to it. We'll do it. It'll be no problem. And soon enough, you're going to see just a ton of supply and demand issues here without people really being concerned about owning or really having to manage their Bitcoin. And I think that's why I feel more and more that it's going to continue to stay like gold in this sense. Like if you have wrapped Bitcoin, I don't see, or Lightning Network, I don't really see a need for a layer 2 solution or some other things to be built on top of it, because you're going to, most of the retail traders don't care. They just want an ETF that they can put in a tax advantaged account and make it work for them. So I think that we think there's a lot of technical stuff that gets built on Bitcoin, but I just don't see that being like the real need. Supply and demand is going to be the thing that really takes this to the moon.
I love that simplification. I did see someone else frame it in this way recently as well. It's just like, do you think that there will be more inflows to the ETF or not? Like, that's it. That's the key question. Ask yourself that question. If the answer is yes, buy Bitcoin. If the answer is no, don't buy Bitcoin. I think the L2 argument, whilst it's very interesting, if you were purely interested in price action, could be a distraction, because the simple question is, do you think there will be more inflows or not? Funky, you had your hand raised. Final point on this before I kind of move it in a slightly different direction.
I mean, Matt already kind of covered some of this stuff in terms of just like, you look at, I'm not a trader, but you look at TA, you look at that point of control where the volume is and everything else. And that explains the teleportation, because when you have these big gaps, and then people, of course, are leverage trading, it's pushing the price up to ungodly amounts. If you look at, especially, I think even the first part of the run, arguably from, say late 2020 up until that first big spike in January, February, was real teleportation. It was like climbing up a wall. And it's just interesting to see where this is all going to go. And I think, to speak to the supply and demand thing, and I keep laughing every time I say Fred Krueger, because all I can think of is Nightmare on Elm Street, and Freddy Krueger. But if you look at just the inflows, it's something absurd. Like they're taking 2,100 Bitcoin off the market per day, or at least they were when the inflows were super heavy. We're only producing about 900 Bitcoin a day, and then after the halving, it's going to be 450. So again, speaking to the supply and demand, there's going to be less production. How much can people gobble up, and how fast can they gobble that up, and how much is that going to drive the price?
Love it. This is essentially just going to be a bit of a bullish space. We've said already, this is not financial advice, but all of these factors that we've just discussed led me to form a very bullish outlook for Bitcoin at the moment. On top of this this post, which I'm about to share, which I thought was a very interesting idea, which I hadn't really thought about. And I'd love to hear people's thoughts on it. I'm going to share the screen, and I'll read it out for people who are listening in. This was by a post by Rinko, who said that the prevailing narrative is that Gen Z millennials will have a harder time building wealth compared to older generations. Most people cite the historic bull markets in housing and bonds as the reason why. These are definitely wealth generation tailwinds for old people that younger generations will not enjoy. But I wonder if we're suffering from a failure of imagination here. Housing and bonds aren't the only way to build wealth. If we truly are entering a period of rapid technological progress, the acceleration, there's a real chance trillions of dollars of value will be created over the next couple of decades. No one is better positioned to capture this value creation than young people. As Douglas Adams once observed, anything that is in the world when you're born is normal and ordinary and is just a natural part of the way the world works. Anything that's invented between when you're 15 and 35 is new and exciting and revolutionary, and you can probably get a career in it. Anything invented after you're 35 is against the natural order of things, and you're probably going to struggle with it. So the upshot here is that the older generations had the layup trade that was housing and bonds, and so they've won big on that trade, right? But the argument is that the next generation has the layup trade that is crypto and AI. Legendary, first, what do you think of this idea?
I think it's a very smart thesis, to be honest. You talk about generational wealth, you talk about generational opportunities, which exactly implies that each generation has their own opportunity. And yes, it's easy to look at the boomers and be like, boomer household income in the US is so high. There's so many boomers with more than $1 million in assets just because of the real estate that they have. And if you compare the multiple on yearly salaries that it took to buy a house back in the 50s, a car back in the 30s, whatever, yes, it was relatively cheaper to get there at that point. But I don't think that this is the right way to approach things. If you talk about like generational wealth opportunities, they're not going to repeat themselves. It's not going to be like each generation will have their own opportunity to purchase real estate at a super, super low price and then build their wealth on it. They obviously, as the world evolves and tech evolves, those opportunities will look different. So I do think that what for boomers was the real estate market, for us could be the crypto market, it could be tech stocks, it could be AI. There's so many things that could be a gen wealth opportunity for us if we choose to seize it. And I see you are grabbing a book in the meantime, which is...
Yeah, this I just got inspired by what you're saying. this is the book called The House of Morgan, and put it up there for the camera. I think I saw a play on the JP Morgan dynasty, and hang on, this might be the wrong one. Okay, this is the JP Morgan banking empire. There was a different one. There's a play on in London about it. There's three brothers who started the bank. I can't remember if it was JP Morgan or if it was a different bank, but basically it shows how they started doing one thing in the States and like investing in one particular thing. Then like the generation later we're investing in railways, and the generation later we're investing in aeroplanes, and then the generation later we're investing in something else. And reading this article, I think it was something inside of me anyway. Like I had been thinking about this idea, but it really, really crystallized it for me, because I think it's actually written very, very succinctly and nicely. And I'm on board with it. Like I'm completely on board with it. I think there is a lack of imagination amongst young people who are complaining about not being able to get their, foot on the ladder in the same way that their parents were. But I think we're making the wrong comparison. And I'm not saying that it's not difficult. I'm not saying that there aren't challenges for younger people, but I'm saying there exists very real extra opportunities which we're not looking at, because they're so focused on how kind of on the study of how their previous generations had accumulated wealth.
By the way, I think the play you're referencing is Lehman Brothers.
That's the one. Yes. Such a good play in London. And probably want to read that book if there's a book as well. I'd highly, highly recommend it. Very, very interesting stuff. We've got a few hands raised here. I think we've got some interesting thoughts. I hope this is an interesting discussion. Let's go to NB and Kusho first with their hands raised. Matthew, I know we'll get round to you.
I'll be quick.
NB first. Welcome, my friend.
Yeah, I'll be quick. I just want to comment on the other thing mainly. This is the caveat. This is the reason why we can't create wealth. And I'm going to tell you it right now, very simply and succinctly. My grandmother had 2 subscriptions in her life, Cat Fancy and AARP. Me, I have AT&T fiber internet. I have Netflix. I have Amazon Prime. I have insurance. I have several different types of things I don't even know I pay for, and that's, in my opinion, the reason why I can never be as wealthy as my previous generations. Because mom maybe did. I don't know. Grandmother didn't have she didn't have, oh, well, this is a whole nother thing to tap into. She didn't have a phone. She didn't have a computer. Those are 2 expensive things, right? And then she didn't have to pay for service on those things as well. Another expensive thing. Like, there's so many new ways to spend money that feels in the current moment as being critical, either to our happiness or to our quality of life. But there's so much we don't need and we waste. And those subscriptions, I really think, maybe it's a crackpot idea, but I really think that subscriptions are one of the main reasons why we aren't as wealthy as previous generations. And that's my point.
Look, I think it's a great point in the sense that, but I think there's 2 things that I would say there. One, yes, people need to control their subscriptions for sure. There's definitely like a wealth of subscriptions out there to take your money should you want to give it to them. But the second point I would make is, you've mentioned a bunch of technologies there which are indeed expensive, but the way I would entirely reframe that is that by me paying for this camera, this microphone, this internet connection, we have basically become a media company with global reach by paying $400 a year to StreamYard, buying a camera, and buying a Rodecaster and a microphone. Like, my distribution is outrageous compared to that, I don't know, $1,000 setup cost, some of which won't even repeat, because some of which is stuck in the Rodecaster and that doesn't have to repeat itself. Obviously, I'll need to repeat the StreamYard subscription. But like, if you think about it from that perspective, our potential is not necessarily limitless, but it's been uncapped in a way that wasn't necessarily possible first. So I definitely take your point on the subscriptions, but I think on the tech, there's just some things which are really have taken off the ceiling from where you can potentially go if you want to go there. Interesting, very interesting stuff. We've got some more hands raised. Let's go to Karma first. Karma, welcome to the stage, my friend. How are you? What are your thoughts here?
Hello, I'm perfect. Another amazing episode. And I have to be that annoying person today that like loops it back to the previous topic just because I absolutely loved it. And it took me like 5 minutes to finally like get over the Twitter rug and raise my hand. But we were talking about how, investing and holding long term, you tend to outperform the market. So like time in the market versus timing the market. The one thing I really wanted to add is this very interesting case study from, I believe, Motley Fool. And they reported how Fidelity analyzed the investments of their portfolio like holders. And between 2003 and 2013, people who have completely outperformed the market were the people who haven't touched their portfolio at all. Now, we can argue here whether or not dying is a viable investment strategy, but as coincidentally, the majority of those people were also turned out to be dead. But I think just, holding and cold walleting it might be the second best thing to death if you want to outperform death. So that's all I wanted to add to this. And on the topic of building generational wealth, I definitely agree with you that while we do have huge shortcomings in our generation, as opposed to our parents, when it comes to just how far your equity stretches, we do have these incredible opportunities in terms of utilizing our talent and a very egalitarian, I would say, environment where what we contribute in terms of talent and tenacity is no longer as limited by where we were born and which type of education we received. So that's obviously like an incredible, like universal democratic outcome. But yeah, great discussion, everybody.
I love that perspective. I definitely think, yes, the egalitarian democratic aspect of creating content on the internet and just sticking it out there and rising over time is certainly true. Also love the the desire to outperform death. We definitely want to do that if possible. Kusho, your hand is raised. What are your thoughts on the idea that this generation needs to look elsewhere? Forget the housing, forget the way the previous people have built wealth. If you want to create outsized wealth, we're moving towards crypto and AI. That's where our advantage lies.
So I really agree that we do have unlimited opportunities and all of that. But I also want to look at it this way. We really can't just say ignore all the things that the previous generations had as their own advantage, because their advantages are the frame of reference for which we have for investments to make, things to do with money, how important is it to go to school, what kind of jobs you should take on as a career and stuff like that. It is these previous generations frame of references that we use to make these sort of decisions. At the same time, we're born into a world with a lot more things to consume, a lot more things to pay for, a lot more things to handle. So it's a very, very unique place for us to be, in the sense that we have more to spend on and less to learn from. Most of the things that we really have the opportunity to gain from are things that we actually have to throw ourselves out there to go and learn. You have to throw yourself out there to learn things about crypto. You have to throw yourself out there to learn about AI. And just to be clear, we are the minority. The amount of us that are really going to go out there and learn these things, that are really going to take the initiative, are really the minority. And most people are still going to make decisions based on things that their parents did, or based on what works for their parents and their grandparents. So we really need to take that into account when we are thinking about, the global majority of people who are in this generation. And looking at it from that standpoint, it's not like, okay, we have these opportunities and we have these struggles in terms of consumption, but these people who consume stuff are also the people who make it possible for us to be here making a shit ton of money. Because you don't make money from a YouTube channel if you don't have people who are consuming that content. You didn't make money as a tech entrepreneur or a tech CEO without people who are using those apps. So it's it's now like a unique problem. Like, okay, do we create more things for other people to use, or do we create less things so that people are more, curious to go out there and to learn new things, to try new things? So it's just like, to me, I think, yes, I do agree. We have a super advantage, a unique opportunity. I'm just looking at my own situation in Nigeria, for example. I am 25, and I know people who are like a generation ahead of me. Like, those are like people in their 40s, in their 50s, around that age, who have not made anything out of life simply because they were born into a Nigeria where, one, there was no internet, two, there weren't that many people with access to computers, and at the same time, the country was already in economic decline. So it's not like, okay, we now have the opportunity because we never knew a country that was functioning well. So
Yeah.
we aren't even paying attention to things going well in the country to begin with. We are strictly going out it from the perspective of, let's go out there and make things work for ourselves. And that's why we are able to make these kind of changes that we've been making right now. So I think it's different for country and background by background, but in general, we do have a lot more opportunities now.
For real. And I think that's nice to hear that perspective from somewhere else to kind of make that to make that crystallize for us. Thanks for sharing, Kusho. Want to do a couple of things here. I think it's a really interesting discussion. I think we're at all-time highs on listeners. We got more than 200 listening in with us today. So want to continue it. But just before we do that, we're just going to get you up to speed with what else has been going on in the space from the last 24 hours in the Web3 roundup from the snapshot, which is pinned up top. Want to check in with Legendary and Sammy as well in just a moment. But let's do it. So up top in the snapshot, we have President Biden tweeting with laser eyes. I don't think it was necessarily a Bitcoin reference, but that was funny to see. People enjoyed that on the timeline. Number two, Jack Butcher announces OPEP in collaboration with ACK. I opted in my OPEPens for that. Hillary Clinton suggests Bitcoin has potential to undermine the dollar as a reserve currency. I think that's kind of the point. Number four, Wormholes token begins trading between $1.2 and $1.3 on Whales Market. Always interesting to check Whales Market out now before these tokens go live. Some more news. Ordinal Maxi Biz inscribed 200 Orange Eyes. So that looks to be like another collection coming out on Ordinals. Gen Art Pebbles mint for 0.6529 ETH. They've ripped to 2.4 ETH. Absolute cook for the people who participated there. And finally, DK announces the first ever physical art plus NFT. It's going to be an addition of 30. 15 will be reserved for his top holders. Another 15 will be made public. I checked this out. It's £6,000, which is quite a lot. But DK is obviously one of the digital art space's favorite artists. First ever physical. Had to think twice, like, I really want it, but I've just bought the William Mapan one, so don't know if I can stretch to this one. Interesting to see, though. Anyway, that's your Web3 roundup from the snapshot. As always, I write that every single morning. If you find it brings you some value, please do give it a like. But let's get back into the discussion. Legendary, checking in with you here. We've had all kinds of interesting contributions from NB, Matthew, Karma, Funky, Kusho. What are your thoughts as things stand? Would also love to hear from Funky's got his hand raised, and we've got Sam on stage with us too. I want to throw to him in just a moment.
Yeah, it's very interesting. I hear this point that, there's so many more ways for us to spend money in our generation. And I think that goes back to a book that I mentioned a couple of times, Harari's Homo Deus. Once we will arrive in a society where a lot of the workforce will simply be redundant because of AI and technological advancements, then we need to find something that gives people a purpose, that helps them with sense making. And I feel like once we get there, because universal basic income might be a financial solution, but it's not a solution to sense making and having a purpose, right? That plethora of entertainment opportunities that we have, whether it's Netflix, gaming, yada yada yada, content creators on YouTube, is definitely a nice distraction to have, and to kind of keep a bit more peace across the society that suddenly has to deal with the question what the purpose of the majority of the workforce is, from purely that working standpoint, which it takes a very central role in our society, in our political structures and systems, how we have established them over the last 1 to 2 centuries.
Very much so. I like this comment as well from DCWB Network on YouTube. Part of the problem is the abundance of different opportunities that distract us from our first goal. I think that's one of the biggest things. Young people need to managed now in many ways. We're like guinea pigs with these phones in our pockets, right? And like, how do we actually integrate these things into our lives and control, like use the technology rather than let it control us? So I think that's one of the big things that we will need to deal with, and are still dealing with actually since the 90s or early 2000s. We're going to go to Funky with his hand raised, then we want to bring Sam into this conversation. Funky, what are your thoughts, sir? Oh, Sam's
just a real quick comment about the Biden thing. I don't belong to a political party or any of that stuff, but I can tell you that there's been a huge conspiracy theory surrounding Casey winning the Super Bowl and Taylor Swift, and this is going to get Biden reelected. So this was just probably a thumb in the eye to the detractors. I can't imagine Joe actually tweeted this himself. It was probably an intern or something just feeding into that madness. But I thought it was hilarious to see it on my TL this morning. And then I really got to recommend to back up Legendary. If you've never read Homo Deus by Hariri, you can just read the last quarter of the book. Because if you've ever read Sapiens, his first book, it's just a non-chronological repackaging. But that last quarter of the book where he envisions the three paths on which humans will take with technology, really, really fascinating stuff. So kudos to Legendary for bringing it up twice now.
Very much so. I've read it as well. Very, very good book. Before we go to our final concluding thoughts from some people on the stage, as well as some people in the audience, it is time to shout out our sponsor, Gondi, the premier NFT lending protocol trusted by legendary collectors, Seed Phrase, G-Funk, Tony Herrera, Phantom Scribbler, and Mooncat. Today we showcase Gondi's unique sell and repay feature, which no other NFT lending protocol had implemented before them. Sell and repay essentially eradicates defaulting on loans if the value of your asset is more than the loan you took out. This works, for example, with you borrowing 7 ETH on a 10 ETH asset, and you need to pay back the 7 ETH plus interest tomorrow, but you don't have the cash. Normally, you would lose the asset automatically via smart contract if you do not have the cash to pay back the 7 ETH loan plus interest. But with Gondi, you can accept a buy offer on the asset and keep any excess. So that is a very helpful feature.
Wow, B-Check, that's a fantastic lending solution. I got to check into that and consider that next time I need a quick amount of cash to free up some liquidity. Thanks for the heads up. I'm going to write that in my notes.
You should subscribe to it. Actually, you like the subscriptions. They offer a subscription. It's very, very reasonably priced, and will take up all of your time and your attention, so you can't do anything else.
I'm exhilarated, B-Check. Thank you.
Good stuff. Final concluding thoughts. Matthew, your hand is raised. What's your final take here?
Just the final take that Jeff Bezos once asked Warren Buffett, if your investment strategy was so simple, how come everybody doesn't copy you? And Buffett responded, because people don't like to get rich slow. And I think that's one of the biggest challenges with our generation, or the younger generation here, is that like you've got TikTok brain, you've got pump and dump schemes, you've got ERC 404 tokens where you can fractionalize NFTs and lend against them and all these crazy things. People need to just slow the fuck down and they need to just let that stuff grow over time and compound. Compound interest is your friend. It will lead to generational wealth.
Love that take. Preaching patience there. I think that's quite valuable. Sammy, just wanted to share your comment on, oh, that's the wrong one. Here we go. You wanted to mention attention span. Take us out, Sammy, with a final conclusion here.
Yeah, I think it's just, this is probably touching on the evolution of like going back from generations to the current generation. I think we're taught a certain way by businesses to spend in a certain manner. And I think, yeah, managing your expenses, but also like the chap on stage, I haven't got it in front of me, so I don't know who it was, but said that obviously compounding interest and compounding returns, that does lead to generational wealth. And I think just having that, not being so hasty and trying to yeet X amount of money into an opportunity and then losing it the next day, just building slowly, that will work over time. You just have to have that patience and just remain curious. If you're curious, you're probably more likely to come across opportunities just by being open-minded rather than being closed-minded. So I think that's something as well that's worth considering.
Very much so. Makes sense to me. Legendary, a final point from you before we close out?
Definitely agree with the remaining curious. Like, I don't ever want to end up in a position where I'm like, oh, this is new tech, I don't want to touch this, I'm not interested in that, and stop learning at some point, as you know, many people do after you reach the 35th year or the 40s. And it's definitely detrimental to have that stance.
That will be funny though to see, right? Because I guess we are approaching that bracket where in that paradigm, it's like, look, anything from 0 to 15, anything in the world in that period of time of your life, that's just normal to you. 15 to 30, it's like, okay, you can get a career in it. That's, you can adjust to that. 35 and onwards, you start to think like, oh, like this isn't what I'm used to. Maybe you start to struggle more. So I want, it'll be interesting to go into that age group, I guess, and see whether we can.
This time next year we'll both be closed-minded, B-Chat. So
Yeah, exactly. It's just like I'm out.
Yeah, but I already see it. Like I'm 32, right? And if I talk to some of my peers, like there's already a third who's falling behind, not trying to use AI tools, not using
100%.
ChatGPT. And that's like one of the most significant technical things we've seen in the last decades, I would say. And they're like, nah, I'm not going to try this, despite it being free and all you need is the internet for that, right?
Man, I even see some people being like quite anti upgrading their phones and stuff, like upgrading to the, you know, I think we'll see it with Vision Pro as well, right? We'll see something like that where people will just be hard against it rather than trying to experiment with it, figuring out how to make it make sense. But guys, appreciate we didn't talk much today about the NFT market itself. As always, the news is in the snapshot, which is pinned up top. So if you need more information, you can get to it via that document, via that tweet. But just a reminder for anyone who's new here, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. GMT, every day of the week. Today's been an all-time high with listeners. We have more than 200, as high as 230. So we are very, very grateful for all of you being with us. We hope you enjoyed the conversation. We sometimes discuss topics like this, as well as getting into the details of the NFT market every single day. So we will be back with you tomorrow. Hope you have a wonderful day. Thank you, Legendary, for co-hosting. Thank you, Sammy, for being with us too, and your takes. Thank you to everyone on the stage, Matthew, Karma, Oxy, Funky, Kusho, and Jack. And we will see you tomorrow. Bye-bye.